Alrighty, good morning, everybody. Thank you for hopping in. We'll get going here. I want to thank everybody for taking the time today to join us. Before we get started, I have some important information to share about who we are here at IAMS and some quick highlights on why our agents love working with our team. I have a few polls during the webinar, so if you have any questions, please do not hesitate to put them on the webinar questions, and we'll make sure to get those answered for you today. First thing I want to highlight today is our commitment to delivering best-in-class customer service for our agents. And one way we do this is you can always reach a live person during our business hours at 800-255-5055. We strive to answer your phone calls with an IAMS employee within 2 rings or less. Our new producer builders are for those of you who are new to us at IAMS. These bonuses are available based on your production levels in your first 180 days of contracting with us. We have great levels that you can qualify at, and as you can see, inside each level are some great options for you. We've got incredible business building tools, personal perks for you, and even cash rewards available. If you'd like to know more where you stand towards this new producer builder, or if you'd like to have a conversation about how to achieve that next level, please give us a call and talk to one of your sales directors here. Another business builder program we provide to our agents is our referred producer program. I see a couple advisors on with us today that have taken advantage of this program. Our business on the wholesale side of the industry is similar to yours in the field in that one of the best leads you can ever obtain is a referral from one of our valued producers. This is why we want to make sure it's worth your while to refer a producer to us. When you refer a producer to us and they get it contracted, we will cut you a $50 check. We'll tell you a $50 thank you check. Now where the real money comes in is as your referral starts to write business, you're going to receive an override on that business. Our ownership team, Charles, Steve, Curtis, and Chris, sign checks for thousands of dollars every quarter. With that being said, if you can think of anyone who could benefit from doing business with our team, please type their information into the question box. You can email me that information. Below that is our marketing reimbursement program, which is our most popular program that we offer. We have for every $100,000 in FIA premium, you get $100 in marketing reimbursement account. Why this is so important and lucrative for our advisors is we truly do consider this to be your money. You have the flexibility on what services, when, and who you use these funds with. It's your marketing reimbursement. We don't tell the vendors you have to use. We do recommend vendors that we partner with and leverage reduced rates and preferred services. We also have our creative team to create a marketing strategy and provide in-house services. If you'd like to know how much is in your marketing reimbursement account or have a conversation about how to utilize it, give your sales director a call at our office. We'd love to speak more about this with you. Back office support. This is another way we add value to your business. This is the core of IAMS and how Charles Herring founded us years ago. We want to help the independent advisor work smarter, not harder. We're going to do that with great business building tools and resources. Of course, advanced case design assistance, life and annuity quotes is an area that we assist with. We're going to get you those illustrations that you request within 24 hours. And I'm going to be honest with you, in all reality, we're probably going to get them to you much quicker, usually within an hour. Submission to commission support is handled by our new business team. Mackenzie heads up the annuity side and Michelle on the life side. They have a fantastic team who work tirelessly to help you get commissioned quicker. We'll scrub the applications, submit them on your behalf, do the administrative tracking, and get you updates on the cases as needed. We do this to ensure you get commissioned as quickly as possible. This is a service we provide to our valued producers and how we help you grow your business by keeping you in front of clients while our team handles the back office support for you. Our website is also a great tool for our producers to use and another reason to work with IAMS. Once you're contracted, you have full access to everything you see on the slide and so much more at IAMSinc.com. If you haven't registered with our website, it's very simple to do so. When you're done with us, let's get a call going and we'll create an account, and we'd love to talk you through how to go through that website and everything it has. A lot of great resources are available, including illustration tools, online forums, product grids, and product news. Industry updates are out there for you as well. Technology is where the industry is going, and Luma is our newest partnership to streamline the application process. Most of our carriers are now on the Luma Firelight eApp platform, so you can go one site to submit business. Some carriers are going to eApp only for some of their product lines, and will also offer extra compensation for utilizing that eApp platform. Make sure you ask your sales director before you submit a paper app if you can earn more by doing e-app. We do have a full in-house creative team who can help you help your practice, and a lot of items are turnkey and available to you. Many of our sales resources are white labeled, so we can simply impose your contact information and your business logos onto it. Speaking of your logos, agency solutions is an area of expertise on our team. If you haven't created a fully customized brand for you and your agency, we can help. This is going to assist you with name recognition, which grows your national market organically. Lastly, digital marketing solutions are a very popular topic among IAMS. We can help you with websites, social media marketing, email marketing, and more. The internet and social media sites are where the overwhelming majority of prospects go to for information. Making sure you're accessible and represented in those marketing lanes is beneficial to growing your business. Reach out to myself or one of the sales directors when this webinar concludes to talk to them about how you can access IAMS Creative. We can certainly get that ball rolling for you. IAMS also offers a complimentary marketing analysis for agents looking to explore new sales ideas and programs. Whether you're new to the industry or a seasoned producer, this free assessment can help you boost your business with insights on your website, digital presence, branding, current marketing activities, as well as recommendations on trusted vendors for everything from lead generation to seminars and social content. Reach out to your sales director again to get started with a marketing analysis at any time. We founded IAMS Wealth several years ago, and what we've done is grow this division of IAMS very organically. We've helped advisors become IARs and pass the Series 65 at a very successful clip. Once they have you registered, IAMS Wealth will bring great value to your practice with an incredibly competitive fee structure for both you and your clientele. We have great technology and great investment platforms. This has been a major growth sector for our business, and assets under management could be a major growth sector for your business as well. We're gearing up for our next incentive trip to the Dominican Republic with Athene, March 22nd to 25th of 2026. All your Athene annuity premium written through IAMS now through the end of the year, December 31st, 2025, is going to count towards qualifying. At 4 million points, we'll punch the ticket for you and your guests. Call your sales director today for details and check your current point standings. Qualifying is also open for our next incentive trip with SILAC to Park City, Utah, August 2nd to the 5th of 2026. 2 million paid SILAC FIA premiums now through April 30th of 2026 gets you and your guests on the list for a mountain adventure. Again, reach out to your sales director today for additional details or to check those current balances. Finally, we do have 2 times trip points going on for all submitted FIA business from now to the end of the year, running from November 1st to December 31st for a trip to Nassau in the Bahamas on February 27th and March 4th of 2027. Let us know if you have additional questions. Reach out to your sales director there. Finally, follow us and like us on Facebook and LinkedIn. It's a great way to stay connected with you and our team. And from there, we'll hand it on over to Kev, let Kev run it and tell us all about Ameritas and their fantastic products.
Perfect. Can you see my screen here, Matt? All good?
Yep, everything's good on my end.
All right, perfect. Well, getting started, I want to talk a little bit about the history of Ameritas before we get into the company and the products and everything along the lines of that. So we've been around for quite a while. 1887 is when we were founded. We went by Old Bankers Life in Nebraska for about 100 years. Decided to make it a little bit easier for our agents when they're out in the field. Instead of saying a whole sentence, we changed our name to Ameritas. And then we had 2 pretty interesting mergers, which are worth noting because we used to be merged with them. So you probably have some policies out there that are Ameritas Acacia, Union Central Ameritas. All of those rolled under the umbrella of Ameritas in 2014. And then the industry that we're working in right now, IDC, the Independent Distribution Channel, was recently created in 2017. So we're still playing a little bit of catch up to other people that have maybe been in the industry a little bit longer, but we do have a very solid portfolio that really helps us out there. And then on top of that, we're a really great company when it comes to treating their clients well, because we are a mutual company, and you'll see over these next couple of slides what we really mean when we say we're a mutual company. We won't just say it. We really do treat our clients with the utmost in respect, since they are technically our policy owners and the people that own our company. So continue forward. Why choose Ameritas? Obviously, we could always get into the products, but if we're just talking about from an overbrush perspective of when a client would fit Ameritas, it would be when they're asking for a strongly rated mutual company, which we are, transparent and reliable illustrations. That meaning if you've worked with all the AG 49A, B Regulation 7702, we have not had to change our illustration for either one of the AG 49 regulations. So we never really participated in the bonus game, the multiplier game, with making our illustrations look inflated. We don't believe in that, specifically because we don't think it's genuine to the client. We want to make sure that what the client sees is what they're going to get, and hopefully even better. That's also great for you as an agent, because you don't have to worry about going back to that client and maybe having that difficult conversation of, well, this didn't perform how either one of us thought it would. So we're trying to save you that. We're trying to make you guys look like the heroes, because when you have a great product and then you also have great returns on that, it's a very easy product for your clients to go spread word of mouth, which is still a very valuable marketing tool. And instead of you guys having to go find leads, hopefully the performance of our products will generate some new business for you guys. And that all comes from this next point, consistent cap rates for all clients. So our oldest product, you guys will see here in a couple of seconds when I'm about to show you, it has a very strong cap. We've not had it for sale for about 7 years now, and it's 25 basis points off of our current sale product. So that's a pretty strong story. Now, if we're not talking about just the company itself and how they treat their clients, about the product features and what we've seen people really gravitate to, it would be our 18 living benefit triggers that are available in all states. Some caveats, obviously, in the usual suspects in New York. There will be a few less critical illnesses. And then California, it depends on when you're going to activate the policy, issue it, and that is when it's going to determine on what kind of living benefits you'll have. So we'll get into that once we get to all the 18 living benefits that we see, because we have each trigger labeled out in this presentation. And then on top of that, our foreign national underwriting is very friendly. Now, when I say foreign national, I'm meaning anything from true foreign nationals not residing in the United States to people in the United States with work visas or permits. And then on top of that, we also are very friendly when it comes to the I-10 market as well. So we'll go a little bit more in depth on that over the next couple of slides as well. This is the first part I want to talk to, the consistent cap rates. So we have right here a present view of 2012 to present. Now we chose 2012 because that's when our product was opened. It is called the XL Plus IUL. So it was closed about 7 years ago, opened in 2011, closed in 2018. So we wanted to grab everyone else in the industry. What were other carriers looking like in that same time frame? So as you can see with Ameritas, in the gray, that is going to be the current cap that we're selling to clients. And that's for any other company you see on here. We don't have any names because we don't want to do that. We just wanted to make sure that you saw on the screen a visualization of some other companies and how they treat clients. So we have the current cap in gray, which you're seeing on the illustrations you guys are pitched. And then what we're seeing for the in-force cap is going to be the red. And then the difference is going to show in this percentage right here. So we see the cap pretty high along the industry. We're sitting a little bit below that, around a 9.25. But you can see our current cap that we have is very similar to our in-force cap, which is sitting at 9% flat, 9.25 for our current sale. And the good thing about our product is specifically, we allow for clients when there's a bump in our new product, we also bump the old product up. So when it goes down, they both go down. When it goes up, both of them go up as well. That's not something that you see all the time in the industry, especially with maybe some of the ones on the left-hand side here, but that's something we pride ourselves on at Ameritas. And the best part about working with Ameritas is, when I was working at a previous IMO, before I left, I asked for multiple core carriers that I used to work with on what their true historical indexing showed. Not a historical look back that, everyone can test and see how it looks, and now, yeah, we'd look really good if we had this index at this point in time. A true historical look back on what clients actually got paid with the credit report. When I asked that, I only got it from 3 different carriers, one of them being from Ameritas, and the other 2 were just because I had a really good relationship with the carrier, and they allowed me to have that. On Ameritas, it's 4 clicks away for your agents to find on our website. So 4 clicks away, and they can find every single sweep date that we have on our IULs on each index. You can see what the cap was, what the value was when you started it, and then what was the value at the end point and what you actually got credited from Ameritas. So that's what we mean when we say transparency up front. I'll zoom back out here. and move on to the life products. So before I get into life products, Matt, I can't ever really find where the questions are. Do we have anything outstanding right now that I need to address before we get into life products?
No questions at this time, but now, before we get started on this, it's a good time for our first poll. So I'm going to throw that up on the screen. Feel free to answer that, and just real quick, let us know, are you currently offering Ameritas products to your clients? Yes or no? We'll put that up for just a second here and let you answer real quick. All righty, we'll close that down and then let Kev take over here and tell us about their products.
All right, well, it looks like I got my work cut out for me here. So we'll definitely get a look at what you guys can offer for your clients then. So if you've worked with us before or ever heard of us at IAMS, you probably know the two products in green. So we used to have an FLX IUL and an FLX term. Those have been replaced by the growth IUL and the clear edge living benefit term. So I do this a little bit differently. I go from right to left. I probably need to switch my presentation around at some point in time, but I think the term just goes the smoothest and then into our whole life because it's very strict on when you're going to use each one of them. And then our IULs, I'll give you the niches on each one of those as well. So the living benefit terms is going to be the first part is the living benefit term, clear edge living benefit. Pretty clear cut. If your clients want living benefits but don't want to pay an arm and a leg and they aren't really necessarily worried about having it for a permanent time, it's just an intermediate policy, that living benefit term is going to be the option for them because it has the chronic, critical, and terminal in every single state except for, as you can see, in the state of New York. Now, it does have conversion, but if your client is focused on conversion only, meaning that they aren't really focused on any other aspect other than they just want to get their insurability locked in right now and then convert later on in life or maybe the next couple of years, that value plus term is really going to be the solid option because the clear edge living benefit term is going to be based on the duration or age 65, whichever one comes first, so that can get a little tricky. Value plus term is very clearly, you get 5 years from when you issue the policy, regardless of age. 5 years, that's the base conversion. We also allow a conversion extension rider, which can get your client to age 70. And the best part and why this is the conversion product is that conversion credits are allowable in the first, I think, 5 to 10 years. And it's a tiered system that you can get a portion of the money that you paid in to convert to anything you see on the left-hand side here, besides the value plus survivorship and the value plus UL. You can convert over and either make your premium the first year cheaper by that conversion credit, or you can make your cash value start at that point that is the conversion credit. So really gives you some flexibility when you're converting out of that policy. Now, it does not have the chronic or critical living benefits, but it does have the terminal on there. And I think that kind of gets overlooked a little bit when we're talking about life insurance, but it is really something that is very powerful when your clients get to that point. One thing I do want to point out here is that I think one sales pitch for terminal illness is a lot of people think of it as end of days, you're trying to square everything financially. A lot of people overlook that if there's an experimental procedure out there for whatever your client may have, health insurance is generally not going to cover that. Them having a life insurance policy with a terminal illness may allow them to maybe even extend their life if there's an experimental procedure that they can use that terminal illness on. So just keep that in mind when you're talking about selling terminal illness. It's not just there for, if you're about to die. You can also possibly extend your life out if there's something out there. And then finally, the instant term, that is something that's new not only to IEC specifically, but to you guys as well. So it's very new. I think we've only had this for about 3 or 4 months now. And the best part about this is it is an instant term, but you're not going to think it's priced like an instant term. I've seen on average, I think when we're looking at instant terms at other companies, you're going to pay somewhere about 75 to 150% of their regular term pricing. Just depends on the price model for each company. Ours is on average, I think 12 to 15% more expensive than our value plus term, which is our clearest product, our cheapest product out there. Now, that will mean that you're going to pay a little bit more than maybe the clearance, very, very little, but you're getting an instant approval process. So this is for a lot of your clients that are maybe working in that P&C. So if you have agents that are under you that you really hired maybe because they have a lot of potential, but they're working only in P&C market, maybe only in health market. If you're trying to get them over to try life insurance, this instant term is a great product to start with because when you're working with most of those agents, what's the first objection you get? Matt, I'm sure you get this all the time. Oh, it just takes too long. Underwriting's too long. Well, I can get you an instant process here for, the first time it's going to take 30 minutes because you have to set up a profile in a portfolio. After that, it takes you maybe 10, 15 minutes, and you'll know instantly if your client's approved and ready to go, or if they are declined. It's not a true decline. It'll just say you don't qualify for this. You'll have to go through full labs. That's really a solid option, if you ask me. And it is the same product as our Value Plus term. The only difference is that it's on an instant basis. It goes up to $2 million depending on your age. And then on top of that, the conversion's a little bit different. To obviously protect Ameritas, we only allow you to convert from year 3 to 5 to any of these products on the screen. And then years 6 through 10, we're going to determine one of these products that you can convert into at a later point in time. So keep that in mind. So if you're going to use each product, Clear Edge Living Benefit term, Value Plus term, that's going to be your cheapest term that Ameritas offers. It also has the best conversion privileges. Instant term, those are going to be for your shops that really want to get something in and out the door really quickly and not have too much of a headache. That's when you'd use each one of these terms. Now, moving on to the whole life, this is going to be another aspect that is going to be very strict on when you're going to use each one of these products. So if you guys are new to whole life, it's not as difficult as people like to say. It is actually fairly easy once you get used to it. But just starting off, I want to start with the Value Plus here. If you've noticed a trend, Value Plus is always going to be at Ameritas, the death benefit option at the lowest cost to get you living benefits if that is available on the product. So you're not sacrificing any living benefits or any riders. It is just simply we're building the lowest cost of insurance structure to get you a death benefit on that product. So as you can imagine, the Value Plus Whole Life is going to be a death benefit focused whole life that is a participating whole life. So it's mainly used for death benefit, but it actually does look good for clients 65 or older when they're wanting guaranteed cash value. And the reason why that is because the low cost structure actually looks better for those older clients because the other two products above it, while they're focused on cash value accumulation, they have higher insurance charges on them built into the policy. So that Value Plus Whole Life, death benefit for clients over the age of 65 looking for cash value. That's when you would use that. Now the Access Whole Life and the Growth Whole Life, it's purely going to be when is your client going to use the money? The Access Whole Life is built for strong early access. So I'd say years 10 through 15, if you're going to use the money, it's going to be the Access Whole Life in the first 10 to 15. Growth Whole Life is going to be a little bit longer. So if you're not touching that money until after year 15, that Growth Whole Life is going to look the best. Now, for both of those clients, the Access Whole Life is really built on this air quotes new idea. I'd say it's air quotes new. It's been around for a while. The infinite banking or debt elimination that really looks the best when you're looking at the Access Whole Life. And then for the Growth Whole Life, that's going to be really think about maybe people further away from retirement. They're not going to touch that money for a while. So middle-aged clientele, or, you know, I feel like everyone has the grandparents that come in and say, I want a guaranteed cash value policy for my kiddos. That's where that Growth Whole Life is going to look the best for those kids as well. So that's where our whole lives fit into the picture there. Now, one thing I will say about any of our illustrations that you see here, besides maybe the terms, any of these illustrations are not going to always win if you compare apples to oranges. So in our case of our whole life, if you were to look at the dividend side, we're probably going to get beat out by the other big players in the market. Where we win, and I think we spreadsheet the best on our whole life, is actually on the guaranteed side, which from my perspective is why you sell a whole life. You want the guaranteed. The dividend is just a cherry on the top. So our illustration will always show you a really low figure, but I've seen the policy statements. It's quite higher. We're a very big company we want to under promise the clients and over deliver, because that also helps you guys and makes you guys look better, because we don't want agents to have to apologize for selling an Ameritas policy. That's really the big reason why. So it makes my job a little bit more difficult, because they're like, man, you always get killed in the illustration. When we strip away the paint and all the stuff that other companies are willing to do that we aren't, we all even out pretty closely, and most of the times we actually win with how our structure is built out with the cost. So that caveats perfectly into our index universal life, where this one's quite controversial, I guess you would kind of say, with what everyone will be willing to do. But as a mutual company,
hey Kevin. Hey, before we get into the IUL, we do have a question. One of the listeners is wondering if the term products have any return of premium.
Unfortunately, no return of premium. The closest thing that we would have is that credit, that conversion credit for that Value Plus term, but no true ROP.
Perfect. Thanks, Kev.
Absolutely. So moving into the IUL now, I'm not going to cover too much on the growth IUL. It's going to be your standard cash accumulation, highest cap rate that we have. It has living benefits built in, and it also has our lifetime income rider also built into the policy. Where I want to talk is the next three specifically. I think those are undersold at Ameritas, and I think they bring a lot of value to the field. So the Value Plus UL is going to be a current current assumption UL, so nothing new in the industry, but where we see it kind of fit a little bit better is a term alternative. So I like to pick on New York because they don't have a living benefit term in the state. We don't allow for cross-selling from New York. So what we see a lot of people do is they'll use that Value Plus UL because it has a 15-year no-lapse guarantee. They'll run that at a minimum death benefit solve or a minimum premium solve, and they let it lapse. And then it's just like a 15-year term with living benefits. And the best part is that if I were to choose to activate that term into the ART after year 15 for the annual renewable term, that's going to be a very expensive policy year after year. Whereas on the Value Plus UL, if I say, hey, I want to continue to keep this policy for the rest of my life, it's going to be a level premium that's maybe a little bit higher than what I was paying before, but it's going to be level. So a term, it's going to raise every single year. That's the beauty of selling this as a term alternative. It's going to be a level premium, so you can kind of set your clients in motion a little bit better and plan for them a little bit more effectively with that Value Plus UL as a term alternative with living benefits. Now with the Value Plus IUL and SIUL, I'll cover the IUL first. I think that that's another one that's kind of criminally undersold with us. This is the attempt that you've seen a lot in the industry where people are moving away from the GUL business just because it's not effective on the rate side. Now, we've seen this, it's just a protection IUL, guarantees you to age 90 or 50 years, whichever one comes first, and it gets you on the IUL side still participating in the index of your choosing. So it has the living benefits and the lifetime income rider. I love pitching this product because it's kind of the pivot product is what I like to call it, or the product for every client that kind of wants everything. So I think everyone has had at least one client come in and say, yeah, I want good cash value, I want good death benefit, and I want good living benefits. Most times you're like, well, I have to give up something. The Value Plus IUL works really well in this space. I'll use myself as an example. 28-year-old here, so it's going to get me 50 years of guarantee. That's going to get me to life expectancy. And again, that guarantee is saying that I'm going to be, let's just say I'm in the S&P, I'm going to be at zero for the next 50 years in a row. I doubt that's going to happen, and if it does, I'm sure not concerned about my life insurance policy at that end of the day. But it's nice that Ameritas says that I'll get paid. So that's the true guarantee behind that. But if I build it out like this, and I'm just saying I'm covering my mortgage for the next 30 years, let's say I pay my mortgage off 15 years early, and now I need to focus on building my savings for my retirement. Probably should have been doing that anyways, but let's say I'm just a normal client and I'm like, oh yeah, now I need to start saving for my retirement. There's two methods. If I was in a GUL, I'm more than likely going to 1035 any value that I have over, and I'm going to start a new policy. Nothing wrong with that, but you got to remember, you're now 15 years older. You're going to start a whole new expense charge schedule, which is typically 10 years, and you're going to have a cost surrender schedule, depending on what company you're with. It can be 10 to 20 years, depending on what it is. With the Value Plus UL, I can just say, okay, I'm not focused on death benefit anymore. I'm going to start overfunding this policy. And the reason why this works so well compared to other protection IULs, we have that lifetime income rider built in. So all you have to do to activate that lifetime income rider is to have the policy for 10 years and be between the ages of 50 and 85 to activate it. So now I'm taking this death benefit guaranteed minimum funded policy, switching it to an overfunded guaranteed income that I can turn on from age 50 to 85. That's a powerful piece. It's completely different than what you built the product for. But that's why I say it's the great pivot product, because you can go either way with it, or you can just stay with how it is designed at the front. Now is there any questions? I see a hand raised.
Yep, we have someone asking, is there any LTC riders? I know you mentioned the living benefits. Can you just touch on how those work compared to an LTC?
Correct, yeah. So we don't have any true standing LTC, so it's not going to qualify for that for any plans that you may need, and it's not going to be a 2 to 4%. So how our living benefits work, I'm actually going to get into it after this next couple screens. We pay on a lean approach for all of our permanent products that you see here, and a discount approach from a chronic, critical, and terminal illness rider aspect. So it's up to 90% on our term. And then for our living benefits on the permanent, it's going to be 25% for critical, 50% for chronic, 75% for terminal. And on our permanent products, that's a dollar for dollar reduction. So we'll get into that on these next couple of slides. So you're getting ahead of me here. Great question. I love that. But yeah, we'll definitely go over that in a second here. I want to cover this last product before we move on here, and that's the Value Plus Survivorship IUL. I think this is probably our best product that doesn't get talked about enough, whether it's our industry or just as Ameritas. So Value Plus Survivorship allows for two people to be on the policy. When both of them pass away, the death benefit pays out. So it's great for estate protection. The best part about us is we allow for an uninsurable. This is also a non-spousal policy. So this can be used for business partners, children over the age of 18. the thing that makes us probably the best, I think, SIUL is one, we spreadsheet really well here. We're typically at the top. We're number one, if not number two, when it comes to pricing. The best part is we use this a lot for special needs trusts. So we see if children are over the age of 18, since this is a non-spousal product, we see a lot of the times parents will get it on themselves as the healthy individual. They'll list their child over the age of 18 as the second insured. And then what happens in the best case situation is that if they were to pass away, the parent first, the surviving person on the policy now has access to the cash, and that's available when both people are alive, but they'll have access to the cash. They'll have access to the death benefit when they pass. That'll go to the beneficiary. And then the best part, if the surviving spouse or person on the policy is the uninsured, they still get the living benefits. At other companies that you work with on the SIUL chassis, it cuts off at Table D. So if your healthy person passes away and you're uninsurable at another carrier, if they're the one surviving, you're not going to get a living benefit on that policy because it cuts off at Table D. With Ameritas, we allow that uninsurable to actually take the living benefit, which makes it a very powerful piece because you took that child that didn't have any coverage to having essentially their own IUL with living benefits if they're the surviving person on the policy. So a really powerful piece, especially when we're talking about special needs trusts, because the life insurance benefit that gets paid out does not affect their government benefits. So on top of getting their government benefits on that special needs trust, you are also getting the living benefits from the policy. So definitely something to think about, and definitely a selling piece that we've seen a lot of people have success with in the field. Going to move forward here. Are there any questions specifically on the life insurance products before I very quickly glaze over these next products?
Nothing too specific. Just someone wanted to know if you guys are ever going to look at adding a true LTC rider.
They have floated the idea. It's a little bit more difficult to get approved, and I know that would cause some issues. So yes, we're looking into maybe getting a paid for better chronic care illness rider to get allow for more extendables, or maybe getting an LTC. They're still in talks of it though, so it's not out of the question. So good question.
Perfect. Thanks, Kev.
Awesome. So moving forward here, I'm not going to go into too much depth because we're talking mainly about the life insurance side. I really want to cover 4 products here, or 5 products on this page. So we have fixed indexed annuities. That's what we mainly sell. Accumulation 7 and Income 10. They're very aptly named for exactly what they do and their surrender schedule period. So the Accumulation 7 is built on cash growth. It does have an enhanced death benefit rider, so it's great for uninsurable clients that maybe don't qualify for that SIUL. You can get up to 10 to 40% depending on how much you want to pay on the rider. That allows for that, and it's a 7-year surrender schedule. It can be bought down to 5. Whereas the Income 10, that is going to mainly focus on getting you a guaranteed lifetime withdrawal benefit on you and your spouse. It can also be a joint account, and it has a 10-year surrender schedule, no buy down. So that's really it for the annuities. We do have the Compass SPIA. I'm not going to talk too much on that one. We see that one mainly used for if you're trying to do a single premium whole life. You can't do that with us necessarily well without making the policy. So we see a lot of people put that money in a SPIA, roll the money out over 7 years, and then you generate 2 commissions to the agent, and then your client's still earning money on that SPIA while it's paying out. So it's a really good option for those single pay into a whole life that you want to actually put in over 7 years to keep the policy from making. Now, disability, this is one where I think maybe everyone in the field doesn't really sell this quite enough when it's seen as a difficult sale. It is from a underwriting standpoint because it takes a little bit longer, but from a concept standpoint, it's actually fairly easy. I mean, if we're talking about the average American, I think everyone in the room or clients that you work with can probably fall in the statistic of if there's a $5,000 or a $500 to a $1,000 emergency, most people can't cover that. So what would your client do if they were to become disabled and not be able to pay their bills? If they don't have something from their work, I mean, it's really on them to figure out how to pay the bills from that point on. So we see a lot of the times this disability is really comes down to that easy of a sell, is that the dynamic cornerstone is directly an income replacement if you are to become disabled. Pretty simple. Now, the one that we see a lot of traction to is this dynamic fundamental. This is something that's unique in the industry and even more unique on how Ameritas allows you to do it. So the dynamic fundamental is for homemakers or people that maybe don't have an income but are detrimental or vital to that household. You absolutely need them to function there. So that is something that we see a lot of people use. And the best part about this is that anyone else that has this rider at a company, you have to have their product for the breadwinner. So you have to have their dynamic cornerstone. With Ameritas, we just need proof that the breadwinner has a standalone policy for disability, and then we can qualify them at Ameritas for that dynamic fundamental for their spouse. So something to think about. Now, we do allow for a GSI. That's kind of a little bit different. I'm not going to talk about that today, and it does grab people's attention. But if you have any interest, just let me know, and me and Matt can kind of work to get your disability person on here to talk about that. So any questions on those before we move into the rest of the life insurance product? Awesome. I'll keep moving forward then. Perfect. So this is where I kind of wanted to get to show you guys where everything's happening. So these are the full 18 living benefit triggers. So in the state of New York, there's about 8 living benefit triggers on the critical illness. And then in California, it's going to depend on when do I issue the policy for what I get. So if I issue the policy at 64 or younger, I'm going to have everything on the screen here. If I issue the policy at 65 or older in the state of California, I lose the critical, I still have the chronic and the terminal. Again, it's when you issue the policy. So if I issue this at 64 and my client has a stroke at 65, because I issued at 64, I'm going to have that access to the living benefit. And that's only in the state of California that happens. Everywhere else, you get the full living benefits if you're approved up to age 85. So looking real quick on the lean versus clear discount approach. So on our term, we have to use a discount approach because to use a lean approach, you have to have cash value, and the terms don't have it. So for term, you can get up to 90% of your death benefit, up to 1.5 million total, and it can be broken into 5 accelerations. We guarantee that we're going to leave you at least 10% of your death benefit. Now, there's a whole calculation behind how discount approach works. It depends on how severe was the illness, how long do you have left after the illness to live, for life expectancy. There's a whole bunch of pieces that move around, and you can get up to 90%. How we sell the lean approach is it's pretty simple. If you have any of these illnesses, you get paid out that percentage dollar for dollar. So you know exactly what you get, you know exactly what you have left after. Discount approach, that doesn't necessarily always happen because there's so many moving parts. So if your clients want certainty and a guarantee, really, because on our illustration it says guaranteed lump sum based on your initial face value, you're going to use the lean approach on all of our permanent products. If your clients just want a cheap option that just gets them some kind of coverage, the discount approach with us is an effective measure on our term product. So I want to get a little bit to what's going to help you guys as agents, and then also help you with your clients, maybe making some sales. So for you as agents at Ameritas, even Matt, you're an employee at Ameritas as well. So you qualify for a 4% premium discount on the policy fees and modal factors, and then it applies for immediate family members. So think about your spouse, your children, family members like your parents. I always say it doesn't hurt to, see how far that extends. The worst that Ameritas can say is, no, we won't do that. But it's a 4% reduction in premium for a 20% reduction in your first year commission. Now, a lot of people will be like, oh, that's not a very fair trade. I think the last time I looked at this was with one of my agents. She's 40. She had a policy and she didn't know about this. So we went and looked back at what would happen if she had activated this, and this can be activated after. What happened is she lost about $4,000 in target premium up front, but by the time she retired, about 20 years down the line, she had an extra $125,000 in illustrated value. So pretty fair trade-off to get an extra $121,000 at retirement if that $4,000 doesn't hurt your pocket right now. So definitely something to look at. And then one that's really helpful for you guys in the field when talking about how you can maybe win some cases for Ameritas and pitch some of the business there is the same payer discount. So this is essentially just a policy fee cut. So we cut the policy fees in half because you're helping Ameritas not have to pay policy fees when we take another bank account. So by you having 2 policies with Ameritas, paying from a single bank account, you're eliminating a fee for us that we give you back in the form of a discount. So it saves you roughly $5 to $12 a month. Now, the most I've ever seen on a policy is 15. So I've seen 15 policies tied to one bank account. Now, multiply that by $5 or $12 a month. That's a lot of savings by just checking a button and paying from one bank account. So if we're talking about a term, in the term market, that's enough to usually get you back in the picture if we're losing, or put us at number 1 if you're getting $5 to $12 off of each policy that you're selling. So definitely something to think about when you're selling to your clients. The discount applies to whole life and terms. Now, you can list IULs as policies to get to 2 or more, but they don't get the fee discount because there's so much complex expenses done that we just can't add it there. Any questions on that specifically that I've covered? All right, I'll keep going. So explain a little bit about the lifetime income rider. I already kind of teased this one. So 10 years, it's an automatically included benefit, but to get it activated, you have to have a policy for 10 years, be between the ages of 50 and 85. And the best part is that you have options. You have level, increasing, and potentially increasing. The only thing that you want to keep in mind, you're not going to receive any other benefits once you activate it. So think about when you activate this rider, it's kind of like annuitizing your contract. You're not going to have, it's not going to be taxable, but it's essentially, you aren't going to receive any other benefits. You're really just said, from this day on, this death benefit, this policy is going to pay me lifetime income. How does that look on the illustration? Let's just take a female, 35, standard on tobacco, paying $375 a month. By the time that she gets to age 65, she's paid about 30 years in premium, 135 paid to Ameritas. She's going to say, okay, I want to activate my rider at this point. I'm getting about $1,200 on a level basis. By the time she reaches age 85, so 20 years of distributions at $1,200 a month, she's going to double her money that she's put into this policy, a little bit over that. By the time she reaches 100, if she gets there, she would be at $500,000, half a millionaire on a guaranteed basis, tax-free as long as your policy didn't become a Met. So this is one that I think gets overlooked quite a bit, and I think it's amazing because it's free. But keep in mind who this really works well for. So if we're talking about lifetime income rider, it's going to be maybe think about people a little bit older than my generation younger. What's going to be the biggest concern when we go to retire? It's probably going to be that Social Security that's there. Now, I'm not of the camp that believes that it's going to be completely gone whatsoever. I think it might be a little bit less than what I'm planning for right now. So how are you as agents going to be able to fill that gap? This is a great way, because if you want to get a guaranteed form of income you can't outlive, the lifetime income rider is there. If you choose, hey, my client actually, the Social Security kicked back, it was fine, they had other investments that are carrying them along, okay, that's great. They don't need to use this lifetime income rider. They still have access at 65 to 90% of this $250,000 essentially to go pay for that boat, pay the kids' college fund off, maybe go put a down payment on a house. Whatever they want to do, they can take a loan from. If they never use the money in the form of cash value in this policy, they still have the living benefits. If they never use any of those things, they still have a death benefit to their heirs. So it's a really great approach because you never have to use this lifetime income rider, but it's there included, no cost for your client unless they activate it. So that's really the only time that you have to think about it. So any questions on product before I get just basically to some other information regarding Ameritas that might be interesting to you guys?
Kev, I think it's about time to do our second poll, if that's all right. We're going to throw it in here.
Yeah.
All right. Just let us know, would additional training help you feel more comfortable presenting these Ameritas solutions? Our team can help with that. But just let us know if you would like some additional training on these products after this webinar. All right, we're going to close that down now. Kev, take us through underwriting.
Perfect. So just going to give you some quick underwriting guidelines for our accelerated limits. So 18 to 50, we go up to 2.5 million. 51 to 60, we go up to 1. And then any kickouts or limitations that we have are on the right-hand side. And it's really going to be the usual suspects. Premium finance cases we can't do, criminal history. The one that we see a lot of the times that kicks people out is going to be that build fall out of parameters. So you're not fitting in on the weight and height chart that we have out at Ameritas. Now, pointing out some other markets, I don't know how helpful this will be for you guys. Specifically, I don't know if this is a market that you work in, but if it is, we are very friendly when it comes to work permits or I-10 clients. It's going to be the same thing. The only differentiator is going to be work permit clients are going to have a Social Security number, where tax identification numbers, I-10 clients aren't going to have a Social Security number. They're just going to have a copy, as you can see on this right-hand side, a letter saying that they're essentially paying their taxes. And that's why Ameritas believes that we can cover these people, because most people with the I-10 do not have a Social Security number, so they can't have any benefits from Social Security. So that automatically leaves the gap in their retirement. And since they're paying taxes to the United States and they reside here, we see that there's a need for their life insurance. And with us as being a mutual company, we think that we can be a very helpful piece in their retirement supplement. Now, to qualify for this, you have to be in a U.S. position within the last 2 years. If you haven't, we recommend sending them any clients that you have with this to a urgent care facility, getting that information down. That not only qualifies you for these programs, but anyone that is on this foreign national guideline can qualify up to $1 million, 18 to 60, up to $1 million for accelerated underwriting. So if you get them sent in there early and they maybe don't have to go do some medicals, that saves you guys time and saves them time from having to go do medicals. So we need the requirement, and it just makes it easier if you get it done first. Now, you also have to be within the United States and living here for 12 months or more, and then pay US dollars from a US bank account to qualify for these policies. And then finally, if you guys are agents, I highly recommend either taking a quick picture of this or going to whatever store you have for apps and downloading the Ameritas Agent app. That is going to be from submission to commission on what's going on with your case. Now, I think everyone can agree, emails, phone calls can all get backed up. One thing that I am pretty good about is when the notification comes in on my phone, I typically at least take a quick glance at it. So this is a great app because it'll give you a notification on when your case goes from maybe one status to another. And then maybe that'll help you act on it quicker, get that case sorted out a little bit quicker for you. So it's a great thing. It's free to use, and it doesn't require any different credentials than our workbench. So if you've ever logged into the producer workbench with Ameritas, it's going to be the same exact login information. And then you'll be able to track all of your pending cases and even track your in-force cases as well, along with run quick quotes on all of our term products. So highly recommend this app. If you don't get anything from this meeting, get this app. And then finally, we do have resources for videos and trainings on our broker training tool. So you can scan this QR code. If you don't find it here, if you go to our producer workbench, it's always going to be labeled under broker training, and it has videos on contracting, commissions, life insurance, how to use that app that I just showed you guys. If there's a concept that you need questions on, it's going to have a video for it. And then finally, if you do have any questions for me specifically, this is me with a little bit longer hair. As Matt knows, I usually cut the donate off my hair, so I got a little shorter hair now. But if you do have any questions, you can always feel free to connect with Matt or myself directly. I'm fine with either way. And I can help with trainings here at Ameritas or get you to the right people, at least in Ameritas, if you have any questions. Now, if you need immediate help for an illustration or anything like that, and you can't get Matt, if it's Ameritas, we can be a little difficult when it comes to illustrations. You can also call our frontline sales team here or send them an email as well. So I'll let you kind of decide how you want that done, Matt, but I'll leave this on the screen if anyone has any questions. This is really the number, not only to get to sales at Ameritas, but this number takes you to anywhere else, new business, underwriting, commissions. Anything you need is going to be at that number as well with just different options.
Perfect. Thanks, Kev. One more question in the chat real quick. They're asking, if someone is on I-10, they buy a policy, live here for 25 years, and then say move back to their home country of Peru, will Ameritas pay out the death benefit anywhere in the world, or do you have any insight on how that works?
Yes. So especially in the nature of the market that we're in right now, we've had a lot of these questions just with deportations and whatnot. We are still going to honor the death benefit, the cash value. The only thing that is a little bit sticky with us is those living benefits because it has to be done by a U.S. physician. But we at Ameritas can't tell you, oh yeah, we're not going to pay your policy because you moved out of the country. So it's the same way with deportations or moving away. We're still going to honor the death benefit and the cash value. It's just those living benefits that they have to be done by a U.S. physician. So if you can find one in a different country that's licensed in the U.S., you can still get living benefits. If not, it has to be done in the U.S. for those living benefits.
Perfect. Thank you, Kevin.
Awesome. Anything else, Matt? Otherwise, I can give you guys a couple minutes back.
Yeah. So real quick, we'll go do our last poll. So this one is just kind of in general. Are you looking for ways to improve your product positioning strategies? I think Kevin did a great job in explaining not only the products, but where they fit best for the clients. Are you looking for additional help on that as advisors? So pop that up here real quick and give you a second to answer that. And then if there's no more questions, we can call it a day and you guys can get back to your busy days. Alrighty. Thank you everyone for joining and attending. I know it took up a good chunk of your time, but I really appreciate it. I think it's great stuff and really important for you to know. If you have additional questions or you want to know more about Ameritas and their products, feel free to reach out to me, Matt Willis. I'm a Life Sales Director here, or any of our Life Sales Directors. Number is always going to be 800-255-5055, or visit us at IAMSinc.com for additional resources. Otherwise, if there are additional questions, let us know. Kevin, thank you so much for hopping on. I really appreciate it. That was a great presentation, super informative.
Awesome. Thank you so much for your time today, everyone. Have a good one.
Thank you, everybody.